How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was reported on April 5th, 2022. This is a brief snapshot of the positions held by the institutions as of that date. So let's start by examining the positions in gold held by the institutions. And what we can see is that there's been a decrease in longs. Ever since March 8th, we've been seeing a decrease from 364 down to 346, 327, and now 324. So basically, over the last many weeks, what we've been seeing is long positions becoming less aggressive because of the profit taking by the banks. Now, this is something that we've been talking about for quite some time. After this big rally up in price, which was used by the banks to lure retail traders, okay? This big push to the upside was from reaction from the media about the Ukraine conflict, and that was used to lure a lot of retail traders into going in long. Where were they getting those positions from? That's right, the banks, offloading those long positions to them. Okay, so now we see here on the weekly chart, price is currently being held by an institutional area of buying here. Price came down to it, rallied up, came down to it. So as price continues to just pound through this area, it's like taking a sledgehammer and pounding it into a wall. Eventually that wall is going to break, and likely we'll see price drop like this. All right. So we're keeping our eye on that in the coming weeks. Oil, lots of profit taking on long positions. This is something that we've been talking about for quite some time as well. And again, we pointed out to our members and to our followers of our YouTube channel that we should be very careful because we got a massive rally like this up in price. But we told everybody be careful because the banks are going to use what's going on in the world as a way to offload their long positions. So they got a lot of people excited about entering into long positions here. And they had forecasts coming out, which we were talking about, by the big bankers saying, hey, this is going to go up to 200. And that was exactly what was used to lure people in to get long so they could offload their long positions and push price back down. If you didn't get that message, you should follow us on Twitter and you should follow us on our YouTube channel here. Just subscribe, and then you can even hit the notification tab, and then you'll get notified of any new analysis that we do. So now what we have is price is settling down. If we look at the weekly chart, we can see that it's made its move down towards this area of buying, the latest area of buying by the banks. And so we're going to be watching this one closely because we believe in the future they will start adding to their short positions. Okay, and then potentially even see some big moves on oil. Now here's the US dollar. What do we see with the US dollar? We see that they were recently adding long positions, 39, 43, 44. Recently they took some profits on those long positions. But remember, always important to put things into context. Where were they taking profits on those long positions? Right here. After pushing price up. Okay? Profit taking on those long positions. Now, if you remember, last week we were mentioning how the institutions were likely going to continue pushing price up. Okay, we talked about the monthly chart. We talked about how once the institutions broke through this area of supply, it was going to allow for a bigger push to the upside. And that is what's taking place. We also spoke about how this weekly uptrend was very strong, and this weekly uptrend could help facilitate a move to the upside on the weekly chart. And this is exactly what's happening. So in the coming weeks, we'll see this progress and we'll see this unfold even more so. All right. So let's get to, well, this is the monthly zone right here that I was speaking about right here. Supply removed and opens up the floodgate for a move even higher. Okay. We've been talking about this for several weeks now. So on the Aussie, what do we see here with the Aussie? We've been talking about how they were using the closure of short positions to fuel a move in the to the upside on the chart, and that's what's been taking place. Recently, they opened up some more short positions, and then last week they closed them off. So let's take a look at how that affected the chart. So that happened, the closure of the short positions happened right here at the highs of price. Now, this last week we saw a big push to the upside, and then price came right back down to where it was previously. Now, what we suspect is going to happen here is because the Aussie is very well correlated with oil and gold, any weakness on those charts, we're going to see it coming through on this chart as well. So this is what we're watching for. And because we're not seeing a very strong accumulation of any type of position, like we're not seeing them enter into long positions here. Look at long positions. You know, still in very cooled off territory. So they're not really telling us that they're accumulating long positions. So we wouldn't want to be accumulating longs on the Aussie right now. All right. US CAD longs are also very cooled off here. You can see that for the last many weeks. And this really came into play when contracts expired here. But I'll also show you something interesting here. Since contracts expired, they closed off a significant portion of their short positions, meaning they're not really focused on shorts either. They're not focused on longs. They're not focused on shorts. And if you take a look at the coloration of the cells here for long and short exposure, 45% long, 55% short, they're not really focused on any direction right now. So trading this one, you'd have to understand the risks involved. We're not going to be taking on any unnecessary risks with the US CAD. We do suspect that, you know, with any weakness in oil, that it'll represent itself here on this chart by seeing a push to the upside. US Swiss franc, we've been talking about the potential for strength on this chart, and we see them close off their short positions from 6,000 to 3,000 to 1,000. That puts long exposure up to 88%. And we see the big test of this weekly area of supply, and we suspect that over time price is going to make its way up to our target on the charts here. Euro US dollar, look what we have here. They had long positions at a very aggressive amount, 244,000, and then they took profits on those long positions. Now remember, when you take profits on long positions, price drops. Okay? Price drops. And if we take a look at the chart, what you see, price has recently dropped, found the bottom, a small rally up, down, up, and now back down again. Now we've been talking about a strong dollar, which means a weak euro. They're not quite adding to their short positions right now. They've been sitting at 183 for quite some time. So they're more focused on what they're doing with their long positions. But we suspect that over time we're going to be seeing a weaker euro to come. And next we have the pound. Look at the pound. Look at long positions, cooled off, shorts getting aggressive. And what did we say we were suspecting would happen with the euro? Weakness. And there's no reason why this won't follow suit here. Okay? Take a look at the net positions here. Look how aggressive in the red they're starting to become. So we're starting to see a certain trend build here. If this momentum continues, we're likely going to see this drop right through. The only thing is we have an institutional area of buying here, so it could take some time until it eventually makes its way through there. Next, we have the US dollar Japanese yen. We mentioned last week that we're likely going to continue with price heading higher. There's no reason why it shouldn't. And we take a look here at the positions, and we see that they've been increasing their longs steadily for many weeks now. 71, 96, 115, 117, 118. Look at shorts. They're not focused on shorts in the least. 89% exposure to the long side. This is extremely bullish. And so therefore we're getting very big push to the upside. Last is Kiwi. Longs are very cooled off. Shorts were a little bit more aggressive since contract expired, they've been getting not as aggressive. Okay, they're not in neutral territory just yet, but they're not aggressive. Look at the sentiment here. Very blue, so it's neutral. Short percentage, 52%. Really nothing there. Look at net positions. Okay, we went from bearish to slightly bullish, slightly bearish. There's really nothing here that the institutions are really working on. So I'd be careful with trading this one. All right, ladies and gents, so that is it. If you want more information, you know where to reach us, www.whiteoakfx.com. Make sure you scroll to the bottom of the page and sign up for our newsletter, because you'll be getting exclusive information and analysis from us throughout the week. All right, if you like what we did, please like and share, and we would appreciate it. Thanks, and we'll talk to you soon. Take care.